Hello, and thanks for tuning in the news here at globaltalkradio.com. Today's guest is author and retail trading expert Darren Fischer, and we're discussing methods that traders can employ to become more successful. Now, Darren is co-author of Maverick Trading, Professional Techniques to Create Generational Wealth, and I can't wait to learn more. Darren, welcome to the program.
Thank you. Good to be here.
Let's jump right in and talk about your book. Now, it's not a typical investment book here. Can you describe how it's different, and why did you write the book the way you did?
Yeah, you're absolutely right. This isn't your typical investment book. Rob, John, and I have read hundreds of investing and trading books over the course of our trading careers. I mean, you can really call it an occupational hazard. Our biggest complaint with most of these books, as well as they're technically accurate, they're extremely painful to read. When we were discussing how to write the book, we wanted to make it understandable to the average retail trader. We took out all the complex terms that Wall Street hides behind and broke the concepts down into recognizable and understandable examples.
Now, what was the motivation behind writing the book?
Well, at Maverick Trading, the firm is a proprietary trading firm. Traders join our firm and trade the firm's capital alongside their own for profit. Late in 2010, Rob, John, and I were talking about the traders who applied to Maverick, but they just wasn't a good fit. We wanted to find a way to help these people succeed and do it in the most cost-effective way possible, and that's how we decided on the book. We have to take our hats off to our publisher, though, McGraw-Hill. The team there has been completely supportive, and when they commissioned the book, they agreed that the concepts we were writing about needed to get out to a wider audience than most investment books focus on.
Now, I noticed you devote a considerable amount of space in the book to risk management and position sizing. Most other books don't, so why did you feel this was that important?
Yeah, it's a great question. If you gave someone a crystal ball and told them that 90% of their trades would be profitable, but allowed them not to exercise risk management, there's actually a pretty good chance that they would lose money over the long run. Conversely, if you take a marginal trading method and couple it with good risk management, you can still be profitable. In the long run, it's really risk management that separates the professionals from the amateurs.
Well, are you saying the trading system doesn't matter then?
Oh, absolutely, the trading system matters. It's when you can combine an excellent trading methodology with some rigorous risk management. That's when you get consistent gains and you have a system that can build that generational wealth.
Well, let's talk a little bit about the Maverick trading system that you mentioned. How does it differ from other systems that are out there?
At Maverick, we really describe ourselves as market agnostic. We don't care if the markets are going up, going down, or going sideways. We're going to make money regardless of market direction. Another aspect that differentiates Maverick's system is that it was developed over 14 years and used real capital. There's no back testing here. As we do at the firm in the book, we discuss the psychological underpinnings of the market, as well as the psychology of the traders themselves. The net effect is really to pull away the veil that makes it difficult for retail traders to make money in the market.
Well, okay, but what's the secret sauce in the system? I mean, is there a group of technical indicators that you use?
We're very much a back-to-the-basics firm. We look at price and volume and performance versus an index. We trade a limited number of chart patterns and rely on trade triggers. The human brain is really the best indicator out there, and I think our results have proven it.
Okay, so then it sounds to me like the Maverick system is completely technical in nature. So why technical instead of relying on fundamentals?
Yeah, another good question. We have several sayings in the firm, but probably the most used is that we'd rather be profitable than be right. Fundamental traders often concentrate on being right. We concentrate on following where the money is going to and where it's coming from. It's the institutional investors, the ones who move the market. They spend billions of dollars of research each year on fundamental analysis. Now, we're not going to try to recreate the wheel when the price action tells us exactly what that analysis was. We want to make money from the trends in the market, not move the market itself.
You also delve rather deeply into options in your book. Aren't those dangerous?
If you don't know what you're doing, most things are dangerous. Options are an excellent tool to define your risk really down to the penny. Leverage your use of capital and produce excellent gains. Traders who are new to using options without being taught how to use them, they usually fall into one or more of three traps. Not allowing enough time for the expected move to occur, buying options that have little chance of becoming profitable, and making the position size too big for the portfolio. We teach people how to use options responsibly and profitably. And this is really what allows us to achieve the gains we have and exercise our risk controls.
Now, I can imagine to a lot of people, they're sitting there saying, this sounds like a lot of work. So why would a trader then follow your system versus just putting money into, let's say a mutual fund?
Yeah. To become a professional trader takes some dedication. Absolutely. People who don't have a desire to take control of their financial lives aren't going to get anything useful out of this book. But look at it this way. On average, each year, between 25 and 30% of the mutual funds underperform their benchmarks. And the funny thing is, the fund managers get to choose those benchmarks. This year, the percentage of funds underperforming is over 30%. Now, when you add a mutual fund's fees on top of the underperformance, the average investor is really at a loss, and at a loss on a consistent basis. Simply large funds can't get into and out of the market with any ease. They're just running too much money, and any large buy or sell order is going to move the market. Traders using Maverick's system, just like our traders at the firm, are able to get into and out of the markets with really surgical precision. We can take profits on a consistent basis and cut our losses short. We're not locked into a position like the large funds are. It's really this flexibility and liquidity that allows our traders to quickly react to a changing market, and not only react to it, but profit from it.
Well, let's talk about performance for a bit. Now, your firm has posted some impressive gains in its portfolio. I think, if I read correctly, you're looking at over 100% gain in 2008, and I believe over 50% gain in both 2009 and 2010. So it's safe to say that you're dramatically outperforming the market. But do you take pains to point out that the Maverick system is not a get-rich-quick system, and isn't that a disconnect?
We don't see it as a disconnect at all. This is a system that our firm uses to create professional traders. Professional traders aren't out to get rich quick. Their goal is to become consistently profitable over the long run. And it's this consistency that lets people compound their gains and build that generational wealth. Anyone looking to get rich quick is going to hurt themselves and their portfolios in the process. And the reason is they're just taking on too much risk, and eventually it will blow up in their face. Yes, without a doubt, the methodology at Maverick works, and it works very well. We've outperformed the market over 200 percentage points in the past 4 years. But without risk management, the market would be right there to cut us back down to size. And really, in the long run, risk management is so much more important than stock picking. Take away a so-called professional's risk controls, and all you're left with is a cowboy. And cowboys have a tendency to get trampled. Take MF Global and John Corzine, recent example. Here, Corzine was head of Goldman Sachs. He was a U.S. senator, governor of New Jersey. At Goldman, he was accountable to his risk managers, and he did very well. At MF Global, he was calling all the shots and essentially had no one to force him to dial down his risk. And net result, the guy whose name was being bandied about as a potential Secretary of the Treasury creates one of the top 10 bankruptcies in history.
Good point. Well, in addition to talking in depth about what happens at institutions, you also go into great detail about a trader's mindset and the benefits of trading with a team. Does this really help?
For someone who hasn't experienced it before, absolutely yes. They would totally agree. And here's why. New traders treat trading as a superhero event. It's them against the world. At Maverick Trading, and we go into this in the book, we treat trading as a team event. I mean, look, everyone's a genius in a bull market. They go long stock that's in the news, sit back, and watch it go up. It's when the market tops, starts to trade sideways, or turns down that people get into trouble. The typical retail trader doesn't have anyone he can turn to when the market gets squirrely and say, hey, what's going on? There's no one to look over his shoulder and ask him, why are you making that trade? What analysis did you do on that trade? These people end up trading by the seat of their pants and on gut feeling rather than a proven method. They stay in a losing position too long, and they end up getting out only when the pain is too much for them to bear. At Maverick, and I really feel that what we've communicated in the book, we invest an incredible amount of time, effort, resources so that our new traders not only understand how to trade, but why we trade the way they do, what their personality is, and where their likely pitfalls are. And not only that, but how to avoid them. Additionally, the community atmosphere the firm provides, traders welcome calls from other traders, asking them to take a look at a particular setup. when you have to justify taking a position to someone else, you tend to be very methodical in your analysis.
And you brought up some very great points here. You know, we're almost out of time, Darren, but before we go, where can people find your book?
Yeah, thanks. Our book's available directly from Maverick Trading. The website is www.maverickTrading.com. And we're also available at major bookstores and on Amazon.com.
And again, the book is Maverick Trading, Professional Techniques to Create Generational Wealth by our guest, Darren Fischer, and his colleagues, John Froelich and Rob Reinhold. And thank you, Darren, very much for your time.
Thank you. My pleasure.